We delivered a strong performance in financial year 2026. We had growth of 3.1% for the full year in constant currency terms. On Q4, our growth year on year was 4.1% in constant currency terms. We had strong growth in financial services, in communications, in manufacturing, from the industry side, and Europe, the geography side. Large deals were very good, 14.9 billion for the full year, 3.2 billion for the fourth quarter. The full year was 28% larger than it was the previous year. We shared our AI strategy during the AI Investor Day a few weeks ago. We see a large addressable market for AI services across the 6 areas that we mentioned. AI, strategy, engineering, data, process, legacy modernization, physical AI, and trust. With our Topaz Fabric platform for AI and our Cobalt platform for cloud, we have differentiated capabilities, the capabilities that are operational today and that are working with our clients across each of these 6 areas of the AI landscape. As we look ahead to the financial year 2027, we see large opportunities in AI services. We also see continued competitive intensity, and we see an AI productivity impact, a combination of these things. With a clear AI strategic roadmap and a real-world toolkit of Topaz Fabric, we are well positioned to support our clients' transformation, technology, and operations objectives. Our revenue growth guidance for the financial year 2027 is 1.5% to 3.5% growth year on year in constant currency terms. We expect acceleration of growth in financial services and in energy, utility, resources, and services vertical. Our operating margin guidance for financial year 27 is 20% to 22%. Jayesh will give a little bit of the color with that acquisition, what you mentioned, what the way we have made the guidance, and some other market outlook. So what we are seeing right now is financial services, we are seeing an acceleration of our growth next year. So we had growth in financial year 26, we're seeing more growth. In energy, utilities, services, resources, vertical, similar, good, more growth there. What we are seeing in terms of projects, we see that at the AI Investor Day, we shared that our AI services revenue was growing nicely. We see on the large deals, the net new is pretty large for the full year at 55%. So that gives us support for growth. And we see the compression that we mentioned in that AI Investor Day and earlier just now as a combination. We are not seeing something that has unusually changed from that last quarter to this quarter. In the sense, these are the scenarios we were seeing. It's not either become more or less. It's that sort of a scenario. Good growth on those industries I mentioned, good growth in the AI and compression, and there's competitive intensity. And all that put together with a little bit of like a color on the acquisition is where the guidance comes out.
Yeah, so if you look at the revenue guidance, and I'll just maybe come back to the full year revenue numbers. The 3.1% growth was after absorbing lower third-party related revenue, which was 1%, and the lower on-site mix, which was 70 basis points. So we should look at the revenue numbers in that context. Both of that impacted the revenue from the overall revenue growth perspective. In terms of the guidance for the next year, we had 3 acquisitions, or two acquisitions and a JV that we announced last year. The acquisitions with an insurance company, which is Stratus, which is already closed and it's baked in the guidance. What is baked in the guidance is approximately 25 basis points or a quarter point of the guidance. The other acquisition was Optimum, which is not baked in because we have not closed it yet. We are still awaiting certain regulatory approvals, and once that is closed is when we'll bake in. The third one is a JV with an Australian client of ours, which is also pending regulatory approvals right now. So we have not baked in both of that in the guidance at this point in time.
Sorry, so only Optimum is 25 basis points?
The Stratus is 25 basis points at this point in time.
The margin breakup in the hiring plan.
Yeah, so if you look at the margins, the full year margins is at 21%. The quarterly margins also 20.9, very close to 21%. If you look at the puts and takes of the margin walk from the last quarter, we got 50 basis points impact from an acquisition related amortization that we absorbed. There was a 30 basis points of one-off benefit that we got Q3. So when you compare, that's a headwind, and 20 basis points on account of comp related matters. That was partially offset by 40 basis points of currency benefit, and 30 basis points came from a Maximus performance.
Thank you. I think question on tenure.
Yeah, and the last question was hiring. The last year we had announced 20,000 for FY26, and we have hired more than 20,000 freshers from the market. This year also we are expecting at least 20,000 freshers to be hired.